Great. Good morning, friends, and thanks a lot for tuning in on our today's webinar. So, whether you are a seasoned investor or just starting out, I think this webinar is your chance to make informed investment decisions backed by great data and expert analysis, uncover some hidden opportunities in the market before, of course, others do, and boost your financial confidence with practical insights and strategies by just decoding the recent Q3 FY24 results with Sonam. So, good morning, Sonam. Sonam, you are on mute.
No, good morning, Rakesh. How are you?
All good, Sonam. So, just for a lot of our investors, maybe who have recently joined your small case services, and of course, there are a lot of, I think, thousands of investors now. We just discussed, right? Who have already been part of the journey of small case and Wright Research for now over 3-4 years, kind of thing. So, for the benefit of the new investors, of course, today we have one of the most popular and with a consistent track record, Miss Sonam Srivastava, who is the founder of Wright Research, where she has creates advisory portfolios based on factor investing and momentum, right? Today, we all know about momentum factor. I think Sonam was one of the very few who was ahead of the curve to champion factor investing and momentum investing on small case. Sonam has a decade of professional experience in systematic portfolio management and quantitative trading in teams at HSBC, Edelweiss, and QPlum, where she has built and handled large-scale portfolios and trading algorithms. Sonam is an IIT Kanpur graduate and has a master's in financial engineering from World Quant University. And Sonam is a recognized global researcher in the field of machine learning in finance and quantitative investing. I think with this backdrop, with this expert on our side, I think we can straight away dive into today's topic, which is decoding Q3 FY24 results. So Sonam, I'll just keep the construct very simple for everybody's benefit. We will deep dive into some of the key sectors which have already come up with their results, especially the leaders in those sectors. And I strongly feel that the results which come up in those sectors, which are leaders and again leaders in those sectors, they just
Right.
not only say a lot about the way the companies are performing, but it says a lot about the sector direction. It says a lot about the mood and the pulse of the country as well. And to some extent, like sectors like IT and all that, it says a lot about the global sentiment as well. So I think with this backdrop, would be more than happy to pick your brains in dissecting the latest quarterly results of top companies across banking, say telecom, IT, FMCG, and get your guidance, basically where we can strategically allocate our investments as investors, right, under your guidance. And of course, some insights on who are the leaders of the sectors, and maybe if you can just speak something on those lines as well. So maybe we can start straight away on our topic and with a very general maybe headline kind of thing. So if you can help us with a general overview of the Q3 FY24 results before we get into the sector, how they compare with the previous quarters and your expectations.
No, definitely, Rajesh. So this will be a very, very interesting quarter. And I think the earnings that have come till now have been extremely, impactful, right? So I think we saw HDFC Bank, and that totally moved the market and scared people about earnings this season. And then we saw Reliance, this massive company which showed such strong growth, right? Similarly, we are seeing IT sector, which is very moderate in terms of earnings, right? It's not done extremely well. It is similar to last quarters, but still people for some reason are buying IT stocks very aggressively. I think that is because that sector is showing resilience in the market, and there is a trend of people expect that trend to pick up soon, right, as the Fed rates are expected to come down. So it's been a very interesting quarter. We would see probably on the Nifty universe a PAT growth of around 20%, whereas if you look at the sales growth, it could be around 4%. So it is a seasonal pattern which will be in line with analyst expectations. We are expecting very good earnings coming out from cement sector, oil and gas, automobile. It has been consistent, right? If you look at the last 7-8 quarters, automobile companies have been doing extremely well. There is a margin expansion that has been going on, and then obviously the favorite, I think a lot of our investors will know that we do allocate a lot to capital good infrastructure, construction and all that right now. And, that is going to do extremely well. If you look at the negative side, I would say that media companies, some of the chemical companies will give you negative earnings. And it's interesting because, people expect a specialty chemical to, sort of rise from here, but still this quarter is going to be seasonally bad for it. Technology, like I said, will be moderate, but there is a huge expectation that is building up on that sector. And I hope soon we get more technology companies coming into the right portfolios. So I think Q3 earning is going to be strong. There will be a lot of interesting numbers coming out. Banking is going to be extremely strong. NBFCs, capital markets, we're seeing how BSE, CDSL, and all of these capital market participants are growing, and so that will continue to give these interesting numbers. Housing finance is going to be interesting. So it is going to be a good quarter. If you look at the Nifty earnings, and I'll quickly share a small presentation. I mean, just a slide here. Yes. So let's look at the earning expectation in the Nifty universe. So you would see that the biggest contributor to the growth of the Nifty earning will be cement, which is going to have like a seasonally strong quarter. And then you will have metals, which did really well this quarter, right? There was a huge demand of metals in the domestic economy, which is doing well for that sector, even though those trends might moderate. Telecom, is going to post good numbers. Capital goods, logistics, which are the favorites right now, will do well. Similarly, auto, banking, NBFC is going to add value, but on the negative side, we'll see chemicals and technology and banks show some negative patterns. So it's going to be a very interesting earning season.
Great. So I think just taking a double down on the sector, I think which you have spoken about the most, and maybe you have some very strong views on that sector as well. Let's pick up some sectors. I think where we have already seen some results coming up, especially from the leaders. And as I told, they will definitely set the direction for the industry and for the markets as well, considering their weightage in the large indices like Nifty. So maybe we'll start with the IT sector, and as the corporate earnings season has arrived with blue chips such as Infosys and TCS reporting above expectation result, right? Can we expect that IT sector is going to boom throughout the corporate earnings season? And just wanted to have one more nuance to it. How would you dissect between this large IT companies like TCS, Infosys, and the tier 2 or tier 3 companies where there is a clear differentiation in terms of their services, in terms of their product suite, and in terms of their geography and markets?
Definitely. So, Rakesh here, I think, IT definitely is going through a very interesting phase, right? And like we saw in the last slide that, see, IT earnings are in fact going to be lower, right? You're not going to see very drastic or, fantastic earning coming out this season. But what is working for the IT sector right now is the expectation that are being built, right? So if you look at the commentary that is coming out from the management, what they talk about is things are looking better, right? We might soon start seeing deal wins happening in the BFSI space, in the global markets, or from Europe, Australia and US. You start getting those big deal wins. That is what the projection is. And I think a lot of analysts are saying that your next quarter might in fact be where we start seeing some good numbers coming out of IT as well, right? So IT is at a interesting phase. But obviously, Rakesh, what we have to note here is that all of this expectation is built on the expectation of a rate cut, right? People expect that, because the Federal Reserve is going to take that call that, I want to cut the rates, and that is going to boost the economy globally. And which is why IT would see an upsurge. And in fact, I was reading a research report which said that the same decline that IT has seen when the rates were increased, IT would see the same, rise when the rates are cut, right? But what's very interesting to understand here is that the rate cuts are not set. People expect rate cuts to happen in the March quarter, but after the new numbers that have come out from the US economy, There has been some speculation, it might not happen, it might not happen right away. But definitely, I think IT sector is starting to look very strong with the focus on digitization, with the focus on AI, and all the new innovation that's happening in this sector. Uh, if you look at what are the challenges, I think furloughs were one challenge that the IT sector faced. There is a weak IT demand right now, but people expect that to recover. You talked about large cap and mid cap IT. I think large cap IT is a safer bet right now because we are expecting the whole resurgence of the whole sector, whereas the mid cap IT is slightly highly valued right now. So if you were to pick up IT as a value pick right now, I would say that your large cap ITs could be a good bet. I think HCL Tech could be one standout stock that you could bet on, whereas even the other stocks are showing a very good potential. I'll quickly share a quick slide that we had created, and you would see that if you have the look at these trends, you'll see that HCL Tech in fact has come out as a winner, whereas very recently all of the IT stocks, after posting uh, slightly negative or flattish numbers, I have seen huge buying happening, especially from FIIs, and I think that is because of the expectations that are being built in. So definitely, I think it's an interesting sector, and we are watching out and just waiting for the IT stocks to come up in the Wright Research portfolios.
Great. So I think the major play what you just discussed in IT sector is the macros, right? The interest rate thing and all that. So could you also elaborate on the strategies employed by major IT companies, right, to maintain their growth amidst all this global economic uncertainties, right? So macro is one part of it, but company internally, how are they getting ready for that opportunity which is coming up due to that great macro environment whenever it happens?
Right. Right. So I think, see, yeah, so I think it's not just about the IT expectation, but it's also about the resilience that these companies are showing, right? Things have been bad for these companies, right? The macros, like we say, have been bad for the IT companies, but these stocks have been extremely resilient, right? The declines that they have shown is minor, whereas the business environment has been extremely negative coming from the global markets, right? So I think the resilience is what is extremely important from these companies. I think what they're doing is, they're focusing on the digital services. We've heard about so many IT companies who are announcing projects in the IT space, in the AI space, I'm sorry. And then you see the focus on client relationship and engagement by these companies and building those pipelines that will lead to deal wins. There has been very efficient cost management across the board by the IT companies as well. Uh, I mean, it has led to slightly higher attrition and slow growth in the employees numbers, but still I think the cost management has been quite efficient. They're focused on skill development for their employees, and they've diversified across different sectors or different geographies, instead of focusing betting everything on one geography. So I think that has been quite interesting. There have been strategic acquisitions and different corporate actions that have been taken to do well in a volatile environment. So I think the resilience of Indian IT sort of stands out in this season.
Great.
Yeah.
So I think with this, we can move to the next sector, which is always discussed in the same breath and not that far away sector, which is telecom, right? So IT and telecom has always been discussed together for some reason over so many years. So I think telecom sector has also gone through their own challenges, less of micro, and I think everything about it was always about macros, right? For telecom sector being a regulated industry and all. So now I think for last few years, maybe last 2, 3 years, we have seen, right, that how they are coming out of that whole tough time of theirs and how, according to you, this sector is looking forward and how have the cost associated, like the biggest thing which was coming, I think, as a hindrance for their performance was the cost associated with all those licenses, right? So
Yeah.
now that we are in this 5G world, right, how have the costs associated with 5G rollout impacted the financial results of major companies like Jio and Airtel? Of course, now there are hardly any companies, right? So it's always like the one and two. It's more like a duopoly market. Of course, we have Vodafone, but yeah, it would be great to understand some perspectives from your side as well.
No, definitely. I think uh, like I'm sure a lot of us followed Reliance's earning release, right, on Friday. And I think the uh, big narrative coming out of it, that whereas Reliance has spent a lot on capital expenditure on the 5G rollout, I think they have been very aggressive and they've almost covered most of the country with 5G right now. But obviously, it's a expenditure, right? There is you're not making a lot of profit right now. It's a short-term financial impact. Your revenues would not rise in line with the expenditure that you're doing because of this rollout. But I think if you look at the narrative again coming out of the Reliance Jio, what they've said is that they are expecting a huge revenue growth come out of this expenditure on 5G that they have done, right? And I think the next few quarters will be positive because that capex that these companies have done will start giving returns, and the ARPU, or the average revenue per user, will actually see a resurgence after this the benefit starts coming in. The customer base is going to expand, and obviously the usage of these services with the 5G rollout will also be on the rise. There will be market opportunities that will rise with the rollout of 5G. Obviously, managing cost here, Rakesh, is extremely critical, right? Like you said, this whole industry has gone through such a drastic change since the rollout of Geo, and how they changed the whole cost dynamics, and now companies are struggling to be profitable. I think that would be interesting to watch, but I see some great positives coming out of the telecom sector with this rollout of 5G that has happened. I'll quickly share a slide here, Rakesh. Right, and if we look at this, you would see, I mean, obviously, we're going to see good growth and company specific things, but look at the trend on your right? Like, you'll see that compare the telecom industry with the Nifty, and telecoms is in fact taking a leap, and seeing a lot of attention happening. And obviously, like we talked about the capex is has been has been a pressure on these companies, but we are going to see the benefits coming out of that capex soon.
So on a different note, in telecom sector, just out of curiosity, do you see the sector moving beyond duopoly, any new entrants or something like that? I know it's a huge cost thing, but or
Right.
we will have to live with this duopoly kind of thing for
I
some
mean,
time.
I don't think that there are any new entrants that we're seeing. I think Vodafone has shown good ARPU growth, right? Vodafone will show good ARPU growth, and they will continue to be the third player, right? And you've seen good price movement coming out of the Idea share as well, but it's a struggling share that goes through a number of ups and downs. But yeah, I think what could come and break that duopoly. I think that is an interesting question here, Rakesh. Maybe Elon Musk comes with Starlink and sort of disrupts this segment. But I don't know. I don't see any other major participants coming and causing a disruption.
Got it. So
Mm.
maybe we just covered some sectors which are touching different segments of the world. So I put it that way, that IT sector is more a global thing.
Mm.
Telecom sector is a more India thing. And maybe next two sectors will be more Bharat thing, right? So
Oh.
let's pick up the Bharat sector, which is the FMCG sector, right? Where I think it is touching each and everybody's life on a daily basis. So, and FMCG is something I think which gives a lot of other sectors the confidence or some clarity on how they want to move forward in their business plans. A
Right.
lot of research of FMCG companies like HUL, Godrej, Marico, I think people in other sectors, they actually tend to pick up a lot of things from their insights, right?
Right.
So what is in your experience FMCG sector is going through all about, right? We have not seen such great, exciting results so far,
Mm.
especially with the leaders. So, what are the main challenges you feel they are facing right now, and how the companies adapting to these conditions?
Yes. So, Rakesh, I think in this season also, in this earnings season also, FMCG is not going to come out with some very good numbers, right? It's going to be flattish. It's going to be marginal growth. And I think the major reason for that is that the rural demand in the country hasn't picked up, right? The rural demand that was suppressed since the COVID crisis has been struggling to rise, right? Urban demand, obviously, urban consumption is driving the growth of FMCG, but I think rural demand is it is a major chunk of the FMCG earnings, and that hasn't been able to recover. And I think that is one of the reasons why FMCG companies are not showing extremely good numbers. Right. If you look at and there have been other factors, right? The last year you've seen an average rainfall, there have been export restrictions. The earning season that was expected to be extremely good for FMCG companies has been moderate. So I think there have been certain struggles that FMCG companies have gone through. So we'll see decent sort of performance and growth projections, but nothing extremely attractive right now. Obviously, see, the election season is coming, Rakesh, and I think we'll touch upon it a little bit, I'm sure. But see, people expect that just before the election, the government could boost the rural economy. That's the vote bank, and that could lead to the resurgence of rural demand. But you never know what happens. I think I was reading a report of patterns before election, and governments in fact never spend a lot before elections. I mean, there's no significant uptick. So we have to watch and see what sort of recovers this rural demand. But I think that has been the big struggle. And what's interesting to note here is that the crude prices, the raw materials, in fact, have cooled down quite a bit last quarter, but still there has been a marginal margin expansion. I think these companies are passing out the benefit of the commodity price cut to the consumer to boost that demand. But I think there has been a struggle there.
Sure. So this is more on the company's performance, their challenges and all that.
Yeah.
Do you see any re-rating happening on the P? Because historically, FMCG stocks have always, I think, commanded a very, very high P multiple, right? So
Hmm.
do you see that trend reversing, at least now that we have a strong visibility of a very muted growth for some more quarters down the line? Do you think that the current multiples do justify the kind of growth what we are seeing in the results?
So here, Rakesh, what I would tell you is that FMCG is a highly stable segment, right? It does well when the markets are volatile. It does well when the markets are doing well, right? It is one of the most stable and consistent segments. So I think I don't see that there could be a huge valuation cut happening at these numbers. I think the growth is still positive. I think the companies are managing the cost structure in a very efficient way, and they are making a lot of effort to boost demand. But yeah, obviously those results have not come in yet. But I think FMCG continues to remain a stable segment, and I would not see huge cuts happening here. And I think we haven't seen many results come in just yet for the FMCG segment, even though the expectation is moderate. But let's see if some of these companies positively surprise us as well, right?
Great. So let's moving on to maybe the last sector, at least for today's discussion, the sector which drives all the sectors, right? I think
Yeah.
it starts there and everything ends there, right? It's like a epicenter for all the sectors, and that is banking and financial services.
Yes.
So how you see the banking sector in Q3, and what are your thoughts on its prospects going forward?
Definitely. So, Rakesh, a lot of things happening in this sector, right? I think people were expecting a very positive earnings from the banking sector, and big moves on the price side as well, because there has been a very robust credit growth in the economy, right? uh, People thought that the margins would suppress, but the margins haven't suppressed. Expectation was that they wouldn't suppress by that much. There has been asset quality improvement in the banking sector, and when the interest rates are cut, that would increase the demand in the whole sector itself. Digitization has been on the forefront, and these companies have been adapting to digitization trends. So that is extremely that was big expectation, but obviously HDFC Bank came and destroyed some of our hopes. I think this was the one big correction that we saw in the banking segment, that the big challenge was that the merger of HDFC and HDFC Bank is not showing the synergies that people expected, and the margins and the banking ratios that we watch out for have actually gone for the worse. So that has been one big development here. HDFC obviously is one of the biggest private banking players, and its bad result would impact the overall banking earnings. But yeah, apart from it, Rakesh, we saw ICICI post its earning on Friday. I think they've outperformed on various measures, and they are going to get a good resurgence in price. I think ICICI Bank is sort of coming out as a huge differentiated banking player in this industry. So, outside of HDFC, and HDFC is also right now getting a lot of attention from foreign investors, because I think people think that the worst is over for them. So it will be an interesting thing to watch. Private sectors definitely, private banks definitely are expected to do well. PSUs might see some earning moderation, and small finance banks could show mixed performance. So it would be an interesting earning from the banking sector. Rakesh, I also have a couple of slides on the other parts of the financial services, like the NBFCs and the capital markets. So I can quickly go over that if you are not going to cover them in your next set of questions.
Sure, please.
Yes. So, see, I think the next thing that would be huge would be the NBFC sector, right? I think right now the housing finance is proving out to be a great bet. If you look at the price trends, you would see uh, vehicle finance, housing finance, gold finance, microfinance. All of these companies are going to, show almost 20% year-on-year growth in their assets. Housing finance companies are going to stand out, and they'll continue to stand out because, Rakesh, what would happen is, as the rates are cut, people will start taking loans to buy houses, right? And all sorts of loans will start rising. So I think these companies have a good growth path ahead, and they're going to show very good numbers in this quarter as well. So I would say the NBFC sector would be something to look out for. And lastly, I think the sector that we are all part of, Rakesh, is the non-lending finance sector, or things linked to the capital market.
Yes.
So we're going to see some amazing numbers come out here. I think Angel One, BSE, CDSL, they've already shown, the prices have shown, what the potential is going to look like. And, you'll see that there has been a very robust growth in DMAT accounts, in SIP flows, in the AUM across AMCs. Obviously, debt part of the AMCs, AUM has struggled. So overall it is flattish, but equity has seen great growth numbers. So I think, that would also be a great earning section to watch out for, right?
Got it. So one thing I think you just touch upon very briefly was the PSU part of the banking sector, right? Suddenly we are seeing a lot of excitement around PSU banks. As we all know, right? In the past 3 to 5 years, a lot of cleanup has happened in those segment. And suddenly I think they are coming out from all those bad time and taking head on when it comes to business and all that against the private banks. So especially with the likes of, say, SBI, Bank of Baroda, Bank of India, Union Bank. So what are your views? Because traditionally investors have always shied away from investing in PSUs, and suddenly now PSUs across all the sectors are taking a center stage. I was just reading a very funny tweet in the morning by someone where he told that I agree with everything what Mr. Modi says, but I just couldn't execute one thing which he told, that invest in PSUs. And every PMS or every AIF, most of them, they said that we don't invest in PSUs. So
Right.
when somebody asked them, boss, किसी ने invest नहीं किया तो buy किसने किया और इतना बढ़ गया? And that is where the Pat came the reply कि boss, retail investors are buying. So just maybe on that note, if you can just help us with a better understanding that how PSUs are going seesaw change kind of thing from where they started, and whether it is sustainable.
No, definitely, Rakesh. So I think PSUs definitely are a very interesting story. See, why did people not invest in PSU or institutions stay away from PSUs? Is because they think that some of their books, because of the various government regulations or the loans that they have to take out, are under pressure. There have been asset quality issues in the past. But now, we just kept hearing about NPAs in the private sector, public sector banks for many years, but now I think that has changed. The asset quality across public sector banks have increased a lot. I think the fundamentals are looking so much better, and these banks are consolidating. They are making all of these efforts for a recovery, digitization, and adapting to the new world and growing. And what again also works is, obviously these are all the efforts that are being made, but the valuation here, Rakesh, if you look at the valuation of a public sector bank compared to a private sector bank, public sector banks are still value wise, right? They are extremely undervalued, probably because, all of these large institutions are not looking at them seriously because, they tend to be volatile. Government can come and take an action, but, that seems to have improved. And I think these banks are now available for the public market as very consistent outperformers and still undervalued. So I think we are seeing some good opportunities happening across the board for PSUs. And you talking about other not the banking sector but other PSUs, you would see, yeah, we have seen extremely interesting rallies happening. The infrastructure segment in the oil and gas space with PSUs, right? And I think that has been because we're seeing some very good numbers coming out. It's a fundamental driven growth. They are seeing so many deals happening, and their books are getting clear. They're winning contracts, and we hear about one or the other restructuring or a business expansion plan by these companies every other day. And I think that fundamental growth is driving what the numbers that we are seeing on the prices as well. And still, many of these companies are available at a very, very fair valuation.
So just for the benefit of all investors, Sonam, I wanted to know from you whether at Wright Research, I hope there is no framework saying we don't invest in PSUs, right?
No, not really. So, so Rakesh, we've invested in public sector banks right now. Yesterday, our alpha portfolio was up like 4% plus, and that was all because of the PSU railway stocks and a lot of allocation to the PSU sector.
I just wanted to bring this up because a lot of investors they really feel missed out on investing in PSUs. So just wanted to highlight that you can still get a great exposure to the right set of companies, irrespective whether they are private or public.
Right.
So from banking, I think it's the big daddy banking. Interestingly, RBI is not listed. Otherwise, we would have discussed the RBI results as well. But
Right.
it's always said, right? It's not only the car which drives, right? It's even the road on which you are driving the car, which will decide the performance of the car. I think our economy in general, right? And the way things are managed at the administration level is more like a metaphor, like a road, right? For all the cars we just discussed. So just wanted to understand more now from the economic point of view, under which we all operate, right? As a businesses, as sectors. How do you see the broader economic indicators like inflation, GDP growth, corporate governance, more importantly, because I'm sure a lot of things are changing for the good from where we all started in terms of corporate governance, and that in a way also decides the multiples which the companies or the sectors get, right? So maybe more on that, Sonam.
Yes. So I think, and I'm sorry for some noise at my end, Rakesh, but yeah, I think, see, things are looking very interesting for the Indian market, right? We are seeing inflation has actually cooled down a lot, right? It is within the limit that the RBI looks at, whereas, we are not seeing rate cuts happening only because the Federal Reserve is still trying to put pressure on the economy, right? In terms of inflation, we are set. In terms of the growth projections, Rakesh, if you look at the numbers, the projections that all of the major publishers from IMF to the World Bank to all of these private players in India take about the GDP of the country, everybody is re-rating India's growth on the upward side. Right? People are expecting India to have, that actual India growth story to come out and play in the market. We are seeing some good resurgence happening in the industrial production sector as well, right? And that is something that we would be seeing in the metals earning releases, in the infrastructure earning releases. So the industry is also looking extremely interesting. So definitely, I think, see, the India growth story is why the FIIs are coming in and betting into India. And I think as the global environment improves, I think India would be an extremely strong bet, right?
Got it. So, Sonam, maybe before I get into the Q&A part of it, we are getting a lot of questions. I think you have some more slides or something which you feel can be touched upon for the benefit of all the investors. That would be really great, maybe for the next 5-7 minutes.
Okay, so let us cover a little bit about the economic scenario and maybe some of the sectors that we could have missed. So the first key thing to watch here, Rakesh, would be the rate cut probability. I think that is what is going to govern all the price movements and all the currency movements and everything right now, right? All the commodity movements. So, if you look at a week ago here, Rakesh, we were seeing that the probability of a rate cut was higher than no rate cut. But after the US employment numbers have come, the Federal Reserve seems to think, they can put more pressure on the economy because it's still robust, it's still not going under pressure. So they might not cut rates in March, and that is one big thing that we have to watch out for. I think, how much is the rate cut will totally govern the IT earnings or IT price movements, movements in the pharma space, movements in the real estate and the housing finance and all of these NBFC. So I think that is one key thing to watch out for here. Other thing is that, obviously, Jan was 1 month where FIIs have turned sellers for some reason, whereas the domestic flow is still extremely strong. So I think the correction in the FII flow here, Rakesh, is again totally driven by the rate expectations. We see dollar getting stronger, and then that leads to outlook coming out of the India economy. And I think that has been the reason, but we have to watch out for that. But fundamentally, like we said, India economy remains extremely strong. There is one big factor that's going to come into play into India is the elections, right? Elections are coming soon, and they are going to move the markets. But if you look at the Nifty performance, we have these numbers here, which talks about the performance before and after election, the average performance. You can see that the Nifty always does better before and after the election. So, we are sort of hoping for those trends to continue. And I think there is a big consensus that has happened right now is that the same policies are going to continue in the next tenure as well. So, which could lead to stability and, the same trend that we've been seeing right now continue. Obviously, the interim budget that's going to come in February, first week, is going to be a big event. If the government shifts the focus away from infrastructure to populism, that would be a negative. Or if they continue the infrastructure segment, then that would bring this resurgence of the rally. So, definitely a very important thing to watch would be elections. And yeah, I think these are the key events that I wanted to talk about. We've covered most of our sectors, right? I think we've covered the key ones. On the banking, on the consumption, on the IT and telecom. I think apart from it, we are going to see some good numbers coming out of cements, like I said, capital goods, infrastructure, all of these will be favorites. So let me quickly take you through some other interesting sectors. I think the electronic manufacturing is going to be a one special sector, right? I think it's a new sector that has suddenly come up in the Indian economy, and it is going to show some of the strongest growth in this season. And we can see the numbers coming out of Keynes or Scient or data pattern that speak for themselves. cement sector will show robust growth, and then capital goods sector, which has been a favorite, is going to give you a very good number coming out of this earning. And we are seeing that the price growth for capital goods segment would be extremely strong. Infrastructure segment, again, you can see that it just keeps having these green bars throughout, more than any red bars. I think infrastructure has received a lot of attention from the government, and I think just before the budget announcement, these companies are still again seeing a lot of resurgence. So, that would again be an interesting sector to watch. Chemicals, like I said, would be under pressure. We are not seeing that recovery. China is dumping, and there hasn't been a significant growth. And yeah, I think we touched about the consumption segment as well, right? That we are going to see some good numbers come out. I'll quickly go over and let's talk about what are the sectors that we can bet on with this earning season here, Rakesh. I think the BFSI segment would be a good bet. IT, because of the prospects, would be a good bet. Pharma, pharma is going to show strong earnings driven by domestic formulations and some uptake in the US market as well. So that would be a good segment to bet on. Telecom, we've already discussed, 5G rollout is going to be a positive. Oil and gas would also show good numbers like Reliance showed in Friday's earnings. So that would be a good sector. What we can avoid is maybe chemicals because of, the suppressed demand and no significant uptick. And maybe non-ferrous metals because of the correction in metal prices and weaker demand. So I think that's pretty much it. That's all I wanted to cover, Rakesh. Let's go over to the audience questions, right?
Sure, sure. So great. I think we have a lot of questions. Some of them are around your small cases as well. Some of them on market outlook. So we'll start in that order only. So we have a first question from Akshay. And I think Akshay is asking, I don't know whether Akshay is an existing investor or a prospect, but Akshay is asking what should be a reasonable expectation in terms of CAGR for Alpha Prime of Wright Research. I know we cannot forecast returns, but just to set the expectations right, both on the upside, downside, the market environment and all that.
Right. So Rakesh, if we go and check out the Alpha Prime small case page today, you would see that with the amazing day that we had yesterday, we saw our returns for 7 months are close to 80% right now, right? So if you guys invested in the beginning, right, I think you would have seen a very significant growth, which I think a lot of people have seen. But yeah, see, this is a bull market strategy, right? So as long as the market stays in favor, you would see Alpha Prime giving you sharp returns, right? So that's the philosophy here, that we are choosing the best momentum stocks for the bull market and in a concentrated fashion, right? It's only 10 stocks. So if one stock rallies, it has a big impact on the portfolio. Yes. So I think Rakesh, you're sharing Alpha Prime already, and you can see it's touching like 80% returns. And while the multi-cap index is 24%, let's compare it with, I mean, we don't need to compare it with large caps, but even, on that front, we've done like a 50-odd% outperformance over these indices. So yeah, definitely it's a bull market strategy. It will give you the sharp returns while the market is in favor. But what you also need to understand here, Rakesh, and it's our responsibility to, I think, inform the clients, is that when the risks are high, these high momentum stocks will see heightened pressure, right? So if you guys have invested with Alpha Prime for a while, you would see that, okay, wherever let's say that one fine day when the small cap index corrects 3%, Alpha Prime is showing you 4 or 5% correction, but it recovers also at a very sharp pace. So that's what we've seen in the last month as well, right? There was one day of a sharper correction, but now it has recovered with a massive outperformance, right? So I think that is what we have to be aware of. If I were to give you like a 10-year expectation for Alpha Prime, it would be an insane number, like more than 50% CAGR. But it is it's a strategy where you have to stick with it. If you can live with the risk, then definitely you're going to get very sharp returns out of it.
Sure. Second question is coming from Ashish, and he is a very stock-specific answer. I'm not sure whether this stock is part of your portfolio currently. So Ashish is asking to share views on Adani Wilmar, well-known brand, still underperform. Can it be a good advice to study at this bottom?
No, definitely. I think Adani Wilmar is at a bottom right now. It is underperformed for a while, and that is because probably, because of the pressure that the Adani stocks have seen. But I think with the Supreme Court clearing them and, a lot of clarification coming on that particular group, we have seen some of the Adani stocks crop up in our New India and in our innovation portfolio. And I think it could be an interesting bet to take. Obviously, the PEs are high for this stock. If you compare it with some of the comparable companies, you would see that it is slightly overvalued in comparison with the other FMCG companies. But yeah, I think it's a fundamentally strong stock. The earnings might come up stronger in this quarter, but last quarter we've seen some dip in earnings as well. So yeah, definitely a good stock to watch out for, and it is at a bottom, so we could see some good resurgence happening.
Great. The third question is for me, I guess. So Krishna is asking, when is the mutual funds buy sell coming in small case? So Krishna, thanks for bringing this up. Very soon, mostly early next financial year, that is in April. So we are planning to come up with our mutual fund small cases as well, where of course managers like Sonam would be offering their advices on a basket of mutual funds as well. Sonam, by the way, is already doing that. They have a great infrastructure on mutual fund research as well. But yeah, very soon it will be on small case where an investor would be able to invest with a single click with the same experience, just like what we are doing in stocks and ETFs on an active mutual funds as well. So stay tuned in that. We'll keep you posted on that. Next question is from Amit Changra. With the interest cuts expected this year, is it a good opportunity for a lump sum, or we should wait, or we should do an SIP?
So I think, Rakesh, I get this question 5 times a day, right? Because we talk to a lot of investors. I think everybody has a first concern. Is it overvalued? Is it the right time to invest? Or should I go today, or should I split it into an SIP? So I think, see, that is a very interesting question, Rakesh. I think there is going to be a resurgence that, I mean, the stock market is going strong, right? So if you asked me a week ago, I would have said, um, see, things are looking fine. Why wait it out? And that sort of worked also, right? So in our last live stream, that was one question we got. And since then, your alpha portfolio is up more than 8-10%, right? So see, the market has a lot of opportunities. And what we tell specifically as Wright Research, I'm not talking about anybody else in the market, is that, see, we will do the corrective actions or the risk management when the market becomes risky, right? Right now, we are seeing that opportunity. That is why we are betting on these cyclical stocks. But the moment we see that this opportunity is gone, or there's another sector to bet on, you talked about rate cuts. So it might be, we are thinking, when does the IT sector come in, because that will be the one that will be gaining from these rate cuts the most. So definitely, we will shift our allocation to the adapting market conditions. But definitely, you should be there in the market. And if you think that a lump sum right now uh, could be a little much, and you want to take a slow experience in the market, so then you can start with an SIP. And having an SIP definitely is a great idea, right?
Got it.
Yeah.
So, Rajat Ghai has two questions. I think one of the questions has already been answered. I think it was on a similar lines. If one wants to do fresh investments, let's say 50 lakhs, then how should they start right now? How much for SIP? How much for lump sum? And plan this to be fully invested in how much time? I think more or less you have answered that question. Maybe we'll take up the second question for Rajat. For Wright small case, I think Rajat has been a very old time investor of your small case. For Wright small case, one of your small case, balanced MFT didn't fall much during COVID crash. What you did and how you came to that conclusion?
No, so Rakesh, I'll tell you, see, that is the first moment in time when I got investors, right? So I think, Rakesh, you were not even with small case back then.
Yes.
And I think, see, we had less than 100 customers before the COVID crash. And when the COVID crash happened, I thought, let's close कि ये बंद हो जाएगा क्योंकि इतना this is such a drastic crash that we're seeing. But fortunately for us, Rakesh, what we did was that in February itself, our risk models were saying that the risk is high. We were 20% deallocated from the market. We had gold and bond ETFs. Now, when the crash happened, I again deallocated a couple of times, not more than that. And what happened was that when the market corrected 40%, our strategy was only down 18%, and they recovered within a month of that crash, right? So that was something that small case talked about to the investors. And I remember that was the first time I crossed 100 investors. I was like so happy, okay, 100 investors, such a huge deal. But yeah, I think that was the risk management that we did there spoke for itself. And, that is what, we always have as a priority, that we, returns are good, perfect. But, what we're trying to do here is do the best for the investors. And that means consistent outperformance and consistency, not just in bull market, but also in bear markets, right?
Got it. Sonam, I'm getting this question again and again, and maybe I would like to take this up again. Maybe you can set a tone for this question which you just said, right? You get 5 times a day. Because what's happening is a lot of investors are subscribing to your small case, but somewhere they are not getting any direction to how to go about investing. Say, for example, if somebody has 10 lakhs or, as Rajat mentioned, 50 lakhs. Now, if there can be some help or some guidance from your side, whether they should go for lump sum or in a SIP mode or invest more mode, right? So one of them, Siddharth, is also asking whether they should invest more at the time of rebalancing, where you are doing certain changes. So maybe a couple of things, setting
Right.
the tone for the investors after subscribing, how they should approach your small case investing.
No, definitely. So let me give you a very quick snapshot of what goes inside the small case, right? See, our small cases have that risk management built into it, right? So the allocation to, so this is, let's say, for a multi-factor, you will see that the allocation to gold, bond, and cash, it will come, right? When the risk comes, that will come into these particular portfolios, right? So it's not like we're always going to be fully allocated to high risk equity strategies. No, you will see allocation to sometimes gold and bonds, sometimes cash also come in. And that cash call, when you shouldn't be invested, would be something that will come from the strategy. So the strategy itself will go into crash. I will not, you will not have to take the decision theoretically. So I think, so that's what I tell my investors is that, the cash call will come from the strategy and we will go into cash when needed. But right now, when the market is working, why not take advantage of that? Second thing that I tell here, Rakesh, is that, if you think that, it makes sense to do an SIP, they definitely go through an SIP route. But the maximum, things are looking bright right now. People think that with the rate cuts and all, next year could also be good. But, there could be corrections, right? We saw a 3% correction in the large cap stocks last week. We saw a deeper correction in the banking stocks, right? So, corrections are very organic and they will keep on happening. But, if you stay away because of that short-term correction, you would have missed, the amazing numbers that, Rakesh was showing for the alpha strategy on your screen, right? So I think it's a good idea to be there in the market, and, you can trust us to take the cash calls within the strategy. But definitely, if you want to time your entry and exit into the market, I think investing near the rebalance or investing when you see a correction, I think that always works. And yeah, I think depending on your risk appetite, you can start with a lump sum or SIP. I think all of these philosophies will give you a good experience. And these are all long-term strategies, right? So any short-term correction or any short-term deployment methodology does not make that much of a difference. The actual value of it comes when you're invested in it for 3 to 5 years, right?
Got it. So
Yeah.
just to sum up what Sonam just mentioned, and maybe for the benefit of all the investors, uh, getting invested is something which you have to do whenever you have surplus investable money. I think within the strategy, getting out of the market and getting in the market is best left to the professional experts like Sonam. In the same breath, Siddharth also asked one question. When is the time of withdrawing and profit booking? I think the answer remains the same. All that is being done by the managers for you. So in case if you have any requirement of the funds, definitely you can sell it anytime. But the getting into cash calls is, I think, part of the research process. And it's just not only about looking at the markets in general and all that, because it will depend where exactly you have invested. As Rajat asked, right, that why in COVID, a lot of things had fallen, but maybe this portfolio has fallen relatively much lesser. So I think that is where the crux of this whole conversation, that how to
Yes,
invest.
and Rakesh, another important point is that, if you look at 2022-23, right? And you look at the right small cases, we did not go into cash a lot, right? We went maximum 15% in cash when there was volatility in the market. And then that is why when the market recovered, we had a sharp uptick, right?
Right.
So I think, getting super scared and, going totally into cash, or, trying to time the market very granularly, I think that is a very difficult thing to do. So that is why we rely on our systematic philosophy, right? Depending on data, we are taking this cash calls and deallocation. And I think that is a robust philosophy that has worked for us, right?
Okay. So this is a very serious question, but maybe on a lighter note, I don't know in what context Mr. Gopiraj has asked this question. And maybe again, Sonam, you can have your own perspective here as well. So Gopiraj is asking, conspiracy theory suggests that steady SIPs by small guys ensure liquidity, while big fishes churn this capital and make huge money. So when will small guys become big fish?
I think that's a very interesting question and a very interesting conspiracy theory. But I think the Indian market is changing, and I think retail is becoming a much more important player compared to many of the institutions right now. So that's another conspiracy theory for you. But
Yeah,
yeah,
they are
but
no more,
yeah,
they are no, yeah, they are no more small.
yeah,
I,
yeah. Yeah, and we are all seeing the growth in our portfolios, right? We are seeing, if you're taking advantage of this market, then you are on the path. You stay invested for the next 10 years, you'll become a big fish very organically, I think.
yeah.
Yeah.
Okay, so now here's another question from one of your fan who has invested in your small cases, in multiple small cases for that matter, and that is where the concern is, or maybe the query is that if somebody has invested in your momentum small case and even investing or planning to invest in Alpha Prime, what is the overlap between these strategies? Ishan Anchan is asking this.
So, Rakesh, honestly, there is not a lot of overlap, right? There might just be one or two stocks that would be same between the two strategies, as per my understanding. But yeah, see, definitely these are momentum strategies, and alpha is like a alpha version of momentum, as in what that means is when the momentum moves x, alpha would move 1.2x either upwards or downwards, right? So there is definitely, they will be correlated, they will be moving similarly, but and there could be definitely some overlaps, because we are picking momentum stocks in both of these strategies, but the return profiles and the risk profiles for the two are extremely distinct, right?
Got it.
Mm.
Fine. So moving to some few sectors and some stocks. So a couple of more questions, maybe another 3, 4 questions, but I'll try to take it together. So Finance Guru is asking any insights on defense, railways, and infrastructure with elections coming up. Will government spend more on this? And Shafiq Khan in the same breath is now asking, I have IRFC share buying price at 48. Should I hold or sell? Or if I should hold, then what will be the target for that?
Yes, so I think, see, I am not sure what happens in the election or happens in the interim budget, but I think there is some insider news out there, Rakesh, because these stocks are rallying like crazy, right? So I don't know if anybody has an idea why we're seeing this sharp rally in railway stocks. Please put down your ideas on the comment section or in the chat. But yeah, definitely, I think the expectation definitely here, Rakesh, is that the capex spending and the accelerated deal flow is going to continue, and that is what is leading to this rally in the defense, railways, and the infrastructure segment. And we are allocated there. Our models have given decent allocation to these segments because of their momentum exposure. Some of them are in fact still value stocks. So I think there has been allocation. I think Finance Guru mentioned IRFC, which has been part of our portfolios as well. And if you bought it at 40, then you've seen a multi-bagger returns. And I think much of it has in fact come in the last month, right? Like last month has seen a massive growth coming out of the uh, IRFC share. And we have to watch out for what happens in the interim budget and the election result. These PSU stocks, especially favored by the current government, will be sensitive to a lot of news. So you have to be careful. I think you have to diversify away your exposure to different other segments as well. But definitely, I think this is a good bet to have in the portfolio right now.
Okay, I know you have already mentioned all the sectors which will do good, which will not do that great and all that. But if you have to pick one sector for election as an event, just from a tactical point of view, Rahul Sharma is asking which is the sector to target before election 2024.
I mean, I think that is an extremely interesting question. See, if the current government continues, then you would see the infrastructure segment continue to do well, right? So that could be one bet, but that's a high risk bet, I would say. On the other front, we can take a more diversified sort of a bet, include the resurgence of IT as a factor and diversify away to that sector, or include, some of the financial services stock, the housing finance, etc. in your bet. I think that could be a good bet. I would say that, let's be a little bit sensitive towards the sharp price movements and focus on the larger stocks instead of very small stocks in the sectors. And I think that should be an interesting bet. But, we have to make sure that, we are diversifying our bet and not taking a very, very highly risky bet in expectation of this big event, right?
Yeah.
Yeah.
Maybe last question, because you have just mentioned about IT as a sector, how do you see Dixon Tech at the current market prices?
Dixon Tech, I think, has had an interesting rally that has happened over the last year. It has almost doubled in a year. And in terms of the valuation, it is slightly highly valued in the electronic segment right now. But, I think fundamentally it remains strong. The profit growth has been good. Sales growth has been good. So it could be a good, interesting company to invest into in the consumer durable space. And we are seeing that the consumer durables, especially the high end ones, are still growing. And that could be a good bet in the current economy. So definitely I think it makes sense to have allocation here. It's not just about the IT sector, but also about the electronic manufacturing and consumer durables here. So I think it's a very decent bet to have for the long term.
So maybe last question from my side, Sonam, and if I have to conclude this session, again, now that everybody has heard you, if there is ₹100 allocation which has to be done, right, across all your small case, which are the 2 or 3 small cases or 1 or 2 small cases which you will recommend as an advisor, considering the current market environment? I know this all small cases are yours and all will be very dear to you, but it's more in the context of the current market conditions where you will put your next allocation to, and in what proportion. So I'm just sharing the screen for everybody's benefit that these are the 6 small cases what Wright Research has been managing for over now 4 years, right? The oldest one is balanced multi-factor, 4 year, right momentum 3 year, again small caps 3 year. I think very, very solid, consistent, and across all the cycle wala performance. So it's not something like which just happened overnight and all that, right? So I think that speaks a lot about this whole way of investing. And who better than Sonam to tell us ke boss kahan karna hai?
Yes. So, Rakesh, I think the allocation depends totally on the investor's risk profile. I think balance, I think momentum is the favorite of our investors, right? I think we have the highest number of investors in the momentum. The momentum definitely is something that anybody with a moderate to high risk should look at. Even if you have a slightly lower risk profile, you can have momentum as a part of your portfolio, right? A smaller part. Momentum definitely is a favorite. Right now, if you ask me about the current market and which is the strategy that you need to have today, I think alpha with these numbers that we are showing has been, again, I think the second most bought small case of ours, and it is giving you, a fantastic flavor of the current bull market. Along with it, I think people are betting on manufacturing in India and new India manufacturing. While the 2-year CAGR is 57% here, Rakesh, if you look at the 1-year return, I think it's touched like 100, if I'm not wrong, right? So yeah,
Yeah.
you see it's a touched 100, and that too at a margin over the small cap index, right? So it's a good portfolio to bet on the infrastructure and the policies being continued. So definitely, I think these are interesting, and again, if you don't want to do much and invest, find one small case of ours to invest into. I think the balanced one, which balances all the factors, it's at a slightly lower risk, could be a good allocation to have. So I think it's difficult for me to name a few small cases here, Rakesh. I invest in all of them. If I were to talk about my allocation, I think recently I've increased some allocation in New India and Alpha, right, to take advantage of the market, and it's working good. But yeah, I think momentum and balance continue to be the highest allocations for me personally as well.
Perfect. I think that is what all investors wanted to know. Straight away call to action so that they can do their own now research as well. Now tomorrow being a holiday, so you have all the time to study more. Feel free to ask questions to us on anything on small case. We will be more than happy to answer all your questions there as well. So great, Sonam. I think this was really amazing, and one of a very, very different webinar I think I have done for a few days now, where we actually dissected the sectors straight from the top and had a great view on the overall economy as well. So thanks, Sonam, once again. And maybe if you have some closing thoughts, would love to hear that.
No, it was my pleasure to be here on the Small Case platform and talk to you, Rakesh. And thanks to all the viewers for these fantastic questions and coming on a Sunday. I think, we are positive about the economy. And like we said, risk management will be built into ours and many of the manager strategies. So, don't try to be very, very granularly trying to time the market. I think, it's a good time to be in the market, and let's take advantage of what the market is offering and be careful of what are the risks out there. I think that's it from my side. And, I had a great time talking to you guys.
So,
And I hope we'll see you soon on the Small Case platform. Yeah.
yeah. Thanks a lot, Sonam, and have a great Sunday. Thank you, everybody, for tuning in. Thank you.
Thank you.